Hello, it's that time of year again, time for open enrollment. As you know, open enrollment is the time period during which we all need to do three things. First, identify the benefit plans we're currently enrolled in. Second, learn about and consider the changes that will be in effect for those plans during the next year. And third, determine what enrollment changes, if any, we would like to make for the coming year. To make things easier for you, if you want your current enrollment elections to carry over to 2010, you don't have to do anything. The only exception to this rule is for our medical and dependent care flexible spending accounts. For those, you have to make an annual election and indicate what amounts you want to save in those accounts during open enrollment. This year's open enrollment period is from Monday, November 2nd through Friday, November 13th at 5 p.m. That gives you 12 days to do what you need to do. If you didn't receive open enrollment materials in the mail over the weekend, you should receive them in the next day or two. In addition to what you will receive in the mail, you can find all the details you need, as well as actually enroll or make changes on Webster. Having said that, I want to run through and explain some of the more significant changes we want you to know about. First, biweekly and monthly premiums will increase for all three employee medical plans for 2010. There are two primary factors that call for these increases. First, we expect to be approximately $300,000 to $400,000 over our 2009 medical and prescription drug claims budget at the end of the year. This is due to a large number of high claims during 2009, and it has to be taken into account as we project what our claims will be in 2010. Whether we like it or not, that's the way group health insurance works. We all share in funding the cost of plan expenses, regardless of our individual usage in a particular year. The second factor leading to a medical premium increases is that we are projecting medical and prescription drug claims will increase by 8% next year, simply because of medical cost inflation. This trend factor is difficult to predict, but our 8% projection is on the conservative side compared to national averages that are closer to 9.5% or 10%. Now, in addition to premium increases, we're making some other plan design changes in an effort to manage costs and keep our offerings in line with the benefits offered by other similarly situated companies. For example, one change that most people who are enrolled in one of our full-time medical plans will welcome is the move from a flat $30 doctor office copay to a split copay arrangement where you will only pay $25 for visits to your primary care physician, but will pay $40 for visits to a specialty physician. Now, this change will provide some financial relief in connection with most of our normal office visits, while shifting some cost to individuals who require medical care that costs more than the average participant's medical care. We're also making a change to the full-time employee medical plan deductibles. These changes are being driven by the fact that the $300 individual deductible in our premium medical plan is on the low side of national, regional, and local benchmarks. The average is actually more than $600. So we are raising that deductible from $300 to $500 in 2010 and adjusting other deductibles accordingly. There is something you can do to lessen the impact of these types of increases. You can enroll in or add to your medical flexible spending account for 2010. These accounts allow you to contribute up to $3,000 per year and use those dollars to pay for your out-of-pocket healthcare expenses. The amount you choose to contribute is spread out over each paycheck, and it's tax-free. This is the time to strongly consider your current and future use of this tax savings tool. If you want more information about this opportunity, give us a call in the HR department. Now, another strategic change for 2010, we're taking a couple of steps to really encourage everyone to use generic prescription drugs. First, the $10 generic retail pharmacy copay is the only prescription drug copay that is not being increased. Second, we are removing the annual prescription drug deductible from all generic prescription drugs. This means you will not have to meet any prescription drug deductible if you utilize only generic drugs. The reason for this push on generics is simple. They have been proven to be just as effective as brand name drugs, and they cost both Apubco and each of us as consumers significantly less money. So talk to your doctor about generic medications the next time he or she writes a prescription for you. Now, hopefully you can see the company's desire to be strategic about the plan design changes we're making this year. While healthcare continues to be a major expense for Apubco, as it is for all employers, our overall goal is still to offer competitive and affordable insurance coverage for our employees while managing costs at the same time. We continue to ask for your partnership on the cost management part of this goal by encouraging you to take charge of your healthcare decisions and spending. One last reminder, open enrollment ends at 5 p.m. on November 13th. Don't miss it.